From FS Securities, we are an education and information firm on the Gold Coast in Queensland, Australia. And today I'll go through our new stock pick. As you know, or some of you may know, that every day we scan the market and look for stocks that had extraordinary volume. And that actually starts our research to find out why. You know, I recently gave you some real good stocks to trade. Example, Afterpay, Newcrest Mines, LSA Gold, Flexi Group. And yesterday I made a presentation on a speculative trade on a gold mine in Western Australia called Bellevue Gold. They are all on our website, so go to our website and you'll find them under our picks. Okay, now I will always go through technical and fundamental analysis. And by the way, every trade I show you may be for you or maybe it's not for you. It depends on your risk appetite and how you're happy to take risk with an expected higher return. Well, the company today that I'm talking about is Western Areas. They are a nickel company that actually has been in operation since 1999. Well, as I said, I'm going to go through all the technical and fundamental analysis. First of all, on this side here, you can see that over the last 50 weeks, the company has actually, well, the price of the company has gone up by 40%. It had a period of time when it was on decline after reaching nearly 80% or 70% return. It fell off due to the price of nickel around the world, and then it started to pick up again. And the last 30 days, you can see here, from $2.10 to $2.67. Now, trying to show you the strategies for each of the type of people that we talk to. The investor, that trade may not be for you because the forecast is neutral. And the same thing for the conservative trader. The investor buys and holds onto the stock for months. The conservative trader trades over several weeks. And of course, the aggressive and very aggressive traders are in and out of the market within days or within weeks. Okay, so you can see here over the last several weeks, that's the weekly close. The market has been hovering steady around the $2.80 or the $2.68 to $2.67, has been heading sideways for the time being. But look, last week, that actually this current week, the price has shot up from $2.18 to all the way to $2.80. And you can see here the indicators. Those red dots represent an indicator called parabolic stop and reverse. It's bullish because it happens to be below the candles. The stochastic is bullish. Now the 9-week moving average, which shown by the orange line, is below the 21-week moving average, that is bearish. However, we are excited by how it's narrowing and converging towards it. And of course, the candle has shot up to the upper band of the Bollinger Band. That's very positive. On the daily, one thing we like to see here is that the 50-day moving average has crossed over the 100-day moving average. That is very, very positive. Of course, it's still below the 200-day moving average shown by that black line. But anyway, there is sign that there is major movement. And when you look at the line, the amber line, the orange line, which is actually the 9-day moving average, is above the 21-day moving average. That's very positive. The stochastic is very bullish. Today the volume has been very low because I took this picture very early in the day. However, you look at the volume over the last 2 days, shooting up quite a bit, quite a lot. So that's a very good sign. When you see a green candle and high volume, that is actually the market is telling you we are excited. MACD, that's another indicator. It's bullish Bullish means the market trend is upward. Bearish, the market trend is downward. DMI is bullish, RSI is bullish. All the technical indicators happen to be bullish on the daily, and on the weekly, of course, we've got some area of concern, but anyway, that takes time because the weekly doesn't change every day. The daily chart, of course, changes every day, and the indicators on the chart, of course, change every day. Okay, the next chart. Now we start with the fundamental. By the way, the Morningstar, they reckon that the fair value is at the moment about 14% below. The price is actually 14% below what is the fair value. And fair value is usually a conservative target. So if we go from $2.60 or $2.70 to $3.50 on the leveraged products, I'm not talking about shares, we're talking about leverage, such as CFDs, contract for difference, or options. On a leverage, 10% improvement in the price tells you that you more or less can actually double your profit. Okay, uncertainty, the industry is low, so that's good because people need nickel and they have to buy nickel. Financial is actually quite a good industry to be in, and actually yesterday JP Morgan have raised their expectation to overweight from neutral. That's a good sign. The big boys in the market are starting to buy this company, so that's very positive. Going to the next slide. This is actually directly from Western Areas website, and there it is, the code here. In terms of their production, this is 2019, 2018. You see that the production is greater, but of course because of the first few months of the year with the coronavirus, we expect that there will be some decline in this particular period for the next coming period. Okay, but in terms of processing, so slightly below last year in tons, and cash cost slightly up from $2.96, that's Australian dollars per pound, it's gone up to 3. And but remember that the nickel price has gone up quite a bit as well for the September quarter, December quarter. Anyway, you can see here that the total for the year is $9.68, when a year before it was $8.09. So that's good. People are buying nickel. I guess there is a recovery in the air, I guess. Now from Finance Yahoo, the operating margin is 17% return. This company is bigger than the company that we talked to you yesterday, the Bellevue. This is approaching the 1 billion market capitalization. That's it's starting to approach into the big club. Trading price earning ratio 18, slightly up, but then there could be expectation that the price can actually represent some profit earning increase in the future. Return on equity, we consider that to be low. We like to see return on equity to around 15%, but then if they give the money in dividends to the shareholders, what return would the shareholders get? 7.8 is a lot better than what they get from the bank, around the 2 to 3%. They generate revenue $301 million, and that's nearly $1.16 per share, which is actually quite good. From 301 million, earning before interest and tax, depreciation, amortization, 116 million. So that's also very good. Earning per share is 14.6 cents. Book value 1.9. They've got cash, You can see from the profit they've got here, 116 million. They've got plenty of cash in the bank. Okay, beta represents volatility. So for 1% the total market moves up, this company usually goes up by the same 100% plus 134%. If you want to actually, our debt to equity, so you can see here, they're not geared, they're not really indebted by a great extent. Obviously, closer to 50% is good, but if it's more than 1, it means they've got debt equal to equity. If it's more than 1, they've got more debt than equity, which represents some danger. Okay, next one. This is another area from Finance Yahoo. Again, it goes through the numbers again. I like to get more than one source to confirm the accuracy of the numbers. You can see that the revenue has increased from 18 to 19. This is trailing 12 months period. So there is good return. However, the gross profit last year was below the year before, but the net income was greater. So they managed to actually reduce their expenses, especially with the interest rate has dropped. And of course, corporate tax has also dropped. But here we got greater, but then of course you've got more revenue. Okay, so more data here to confirm the previous slide. Some more results. Again, going through the same figures again for you to study. But you see here beta is telling you the company is 90.91. In other slides we've seen that it's 1.34. So that's why it's very important to get more than one source of information to put it all together. Of course, various analysts get data from wherever they can get the data, and of course they do their own analysis. We actually more of a technical analysts. Of course, we don't ignore the fundamental. 65% of our decisions or our forecast or our trades are based on technical, and then about 30-35% based on fundamental. We believe that technical analysis is like looking at the front mirror. Looking at fundamental is more or less like looking through the rear vision mirror. And of course it takes time to get very recent figures on the fundamental. They're usually about 2 or 3 months late behind. Some of the expert decision, the PE ratio is too high, revenue growth fail, but they've got sale growth rate, which is good. They have a lot of passes. Earning persistence, I guess, failed because we've seen some decline in their profit and then started to climb again. So, but you can see here more passes than fails. And you've got some figures here, cash flow per share. The dividend yield is 1.3%, which is not really great. PEG is too high. We like it to see below 1.2. Price book value $1.26. Price cash flow 8.5 times. That's too much. And return on equity is 2.8. Again, that's much lower than what we've seen before. Okay, technical indicators. The oscillator is very positive. The trend is very positive. The volume is very high. Growth investor. This is maybe for you. Value investor, it's not for you. Income investor, not for you, because the return, the dividend is very low. Recommendation is somewhere in the buy area, but we always said that it's actually for the speculative trade, and this is only for leverage trades. In other words, we're trading CFDs and options, not shares. We expect 10-15% return. That increase in the price of the shares will actually give you some more decent profit. Buying the shares and getting 10% may not be enough. Okay, some more data here, the balance sheet. You can see more data. And by the way, this will be on our website shortly, and will be on YouTube and on our website, on our Facebook as well. So you can go back and revisit all these figures. Okay, finally, our disclaimer. Everything we said here is for general advice only. Before you take any action, please consult with us or with your professional advisor. Remember, there is risk, and there is no guarantee. The market can move up and down, and of course there is no absolute certainty that the market is going to move in a particular direction. Okay, if you have any questions, all you have to do is ask, and these are our details. You can write to me at george@fssecurities.com.au, and our website www.fssecurities.com. You're going to call me. If you're ringing from overseas, you ring 61, you don't need a 0, 61-411-259526. And if you're ringing from Australia, on my mobile, and I'm available 7 days a week, 10 to 12 hours every day. 0411-259526. Okay, happy trading, and I hope you make some money out of it.